All right. So bond market closed, but I guess futures are trading here. You're probably not going to do much, and that may, you know, may have an inside nowhere day today, possibly because of that. So we shall see how it plays out. Just a quick review of last week. So those last 2 days of the week just seemed to come out of nowhere for me anyway. And, part of the reason was the fact that I got this alert on Wednesday as this started to break out. And I'm like, there should be some reaction to this. And, as interest rates started to peel higher there, actually, I think it was just the speed at which they were moving up that eventually got the attention the next day. It was kind of confusing, on Wednesday because there was no reaction. And even if we look at the intraday charts at that time, we can go back to there. This was on the 3rd, right? Right here. It's like, there's nothing going on here. And then at the end of the day, toward the end of the day, the market started to head lower. And it was just, a day up at the top of the range, no big deal. So the reaction that started the next day with the gap down was okay, makes sense based on the pattern, possibly retest. But then, the follow through on Friday all the way down there, and it was like, okay, interest rates are going up. It was like, duh, really? You didn't see what was going on Wednesday, anybody? So we do get our bias and expectations based on what's happening in the past. And then we see, of course, what's happening. So this for me was kind of like weird to get that kind of sell-off after a no reaction on Wednesday. In any event, spiders down here at this area of support, rising 50 MA, moving averages used as the visual aids that they are, take notice that the 20 MA isn't rising anymore. It's flat, whereas it was rising here at a nice angle because we've got this sideways range up here. Resistance is up above now, and we've got a smaller area of support. And just generally, when I look at something like this, is like, will it hold? Ultimately, you don't get a definitive answer because we don't know ultimately what's going to happen in the future. But I look at this and just look at what I call the weight of the evidence. Well, it's in an uptrend. The trend is flattened out, so a bit neutral there to bullish. I look at support and resistance, and I say, okay, here's this swing low here related to this larger top, which is bigger. It's kind of like, looking at big guy and a little guy, right? So the resistance is bigger. Is there a shock to the pattern? Somewhat. If this was a green bar on Wednesday and then it gapped below it, then there'd be a big shock, and that would be even more bearish. So as I look at this and say, well, based on, what was happening, this is a big change. And so it's created a lot of uncertainty. And in essence, it's kind of a wait and see, because that move down is suggesting that there'll be a move lower to where, right? This is part of the thought process, which brings us down into this area because there's really no support between here and here. This little shelf here really shouldn't have much of an effect, based on what's happened over here. And this would be our significant reference point or targeted area if this continues to go down. Now, right now, we've just got an inside day looking at the futures right there. And it's just chopping around. It's in a downtrend on the 60-minute. So the assumption would be that it goes lower, but today could just be a resting day, especially since bonds are closed. There's no direction from there. A lot of times the markets will do that, go into a resting mode or just wait and see. So we're exactly going to be doing that today. Let's wait and see and give this a little bit of time to see if it wants to head lower, whether it's just going to chop sideways here, what it's going to do. So that's there. This is rising on the 50. Again, this is a 24-hour chart, since it's the futures versus the spiders that we were looking at. And, I've got the line down here, which is the major area, but, we always look at these things as areas. So that 2800 area would be a logical place if we assume that this is going to have some type of a, correction of significance. And now as I'm looking at that, I'm kind of wondering how much of a correction that would be. About 5%, which has been normal over the last several years. That size correction has been pretty much normal. 3%, 5%. So I'd have to go back and look. There have been some larger ones over the last 9 years or so, but typical, this is what that has been. And let's assume that we're going to have a correction a bit more nasty down to the next level. And so that would be about 8%. Still within norm. And of course, we're going to see how it all plays out. Qs, they broke through this support here. Here's the next level. Here's another level. You want 170, 174-ish, 175. Just want to keep note of those, set alerts there. Be aware if they come down there, then go ahead and look at your intraday NYSE tick. We will look at the volatility index to see if it's up near some resistance point, some intermarket analysis to suggest that a correction, if it continues down there, has reached some climactic point where it's getting ready to turn. We've also got the 200 down here. And I would assume, I don't know exactly where it is, but if we would look at a weekly chart with a 20, we'd know the 200 is, the 100 is somewhere around here. In any event, and probably in alignment with this low right there. So that 175 to 170 area, if the correction was to continue in the Qs, and let's just go down to the 200 and see, that's almost a 9-10% correction. Okay. We'll see. There's the futures, inside day, resting on that support, 7,200 level, and 7,000 are a little below. 200 MA is down here, and of course it won't be exactly there if the markets were to head lower. And give or take, it'd be somewhere, maybe a little bit lower. And Dow, the one showing relative strength, but pulling back down to major support in the 20 MA. Futures, little inside day, but down there at the lows. You see it's heading lower. It's in a downtrend. Area support right here. And bonds we looked at, oil is down a bit, pulling back after a greater than 100% retracement. So that's normal. That's one of our concepts. After prices make a low and take out the prior high, greater than 100%, our expectation is for a stall in the trend. Doesn't mean it's going to pull back significantly, could go sideways, but our expectation is that this move up is going to be over in the short term. It's just something that historically happens on a pretty regular basis. Where it stops, we really don't know, meaning it could have went up to 78 and then started pulling back. But what you watch for after the greater than 100% retracement is some type of a turn. And clearly, this was a pretty obvious one. Green bar up at the high, gap down and close below the breakout bar. So pretty obvious reversal there. But again, the concept of greater than 100% retracement is a tool that we used to guide us to say, hey, you know what? Maybe it was going to $80, the big round number. No, not likely. Not after that 2-bar reversal and this one that was a breakout failure. So we always have concepts that keep us objective and honest in our bias. Gold heading back down. As you know, we have had no interest in gold because we just don't have a environment that supports gold moving up in any significant way. And it hasn't been moving up, obviously, at all. It got a little extended. You could see how it accelerated to the downside here. And at this point, it's like, is it building a base? Maybe. But a basing within a downtrend, it doesn't pay to get involved with those, because it's much better to be looking for whatever might be basing within an uptrend. Much greater odds. When you have this type of a pattern, even when they break out, they tend to come back in again, because that is just the nature of a basing process. For example, the stock has been trying to break its downtrend for years. And this was an impressive, move. It was on a gap, so I'd give it a little bit less of that impressive view of it, since it happened on a gap rather than it just, kind of opening up here, a slight gap up and a big green bar, which you had here, but it fell back down again. So, the point here is that stocks that are in downtrends, that are basing, they just have a hard time getting going. Some eventually do, like Advanced Micro Devices. That was a dog for a very long time. And once it got going really well. So you have to assess that, and as they're happening, and hard to see. I can back it up here. This is the kind of price action you want to see, meaning, well, sure, it was up above here, but a gap up that goes sideways. You can see, maybe a little more difficult, a gap down that is bought, wide range bar up. So it doesn't fill the gap. That's the kind of price action you want to see, versus the G Pro, which we looked at, gapped up, and now it's filled the gap. Anyway,
that sounds like a good Master Trader Live topic.
Everything we do is a good topic, So, that's where the markets are at. It's basically, we're going to see how this plays out here to, see whether this continues lower, consolidation day, attempts to go higher, whether they immediately fail, or whether there's attempts to go lower that fail, which would give us some information to suggest that buyers are stepping up. And that's kind of been the MO of this market over the last year and a half, is that you have these big corrective moves, which appear to be big corrective moves in the context of the short term, but buyers miraculously step up like as if it didn't happen at all. What'll happen this time? I honestly don't know. When we see, breaks like we did last week, we take it seriously and we wait to see what's going to happen. Yes, Pat, it's closed, but futures are trading, and the odds are they will do little to nothing because they don't have any direction. Since the bond market's closed, the banks aren't trading, and governments. So, what's going to move this in a big way if the big money is resting? And which leads more to today being a go nowhere day, probably. But we shall see. All right, all yours, Dan.
All right, thanks. Good morning, everyone. Hope you had a great weekend. And because of our bias right now, which is wait and see, defensive, that's what we obviously put in our 3 advisory letters. We had a record number of small number of new trade ideas, because what have we just said? So we have Mighty Mo as a long, and it's pre-market holding well. And we had this other transport, and it's down a little bit pre-market. That has to trade over these highs, and then we'll just do a short-term put spread. And that's it. That's all we had for those two letters. And we were trimming our inventory last week with the sell-off, as you remember. You know, I remember on Thursday with the first 5 minutes, I said I am 100% defensive mode, and I was totally focused on managing our inventory. So what do we have open? We have this other put spread here for Friday, NSC, the other railroad, closed with a top and tail, but there's nothing to do. We just got to manage it. But it'd be nice if it's gapping up there. That's would be relative strength. Orly, we have a bear call spread. Had a topping tail, so that's good. It's way out of, it's the 350 short call, so we're just playing the melting ice cube on that. Moss, we still have a put spread. All right, let's go to these gappers. So there's XLF. And, you know, Greg, we were talking about this weird move in the banks, ETFs here, XLF busting up. And then even with yields rising, you know, this thing cratering. And there was one article in the journal today I was skimming. And it said banks are bracing for the higher rates. And they said they've been enjoying easy profits with interest rates. But I'm like, what? What are you talking about? And there's like, well, now they're going to get hurt with the mortgage business because rates are high, and that's going to slow borrowing, which is why the interest rate sensitive sectors like home construction got shellacked. All right, so here's our diamonds. It's right here at the pre-market. It's at Friday's lows, so that suggests, you know, lower prices. It's giving up the strength here. IWM is stronger pre-market, that is, because look at this retracement.